This is a story coming out of TD Cowen, a very reputable firm, and they're just talking about how Microsoft, and I wrote it down to make sure, they've canceled leases for a substantial amount of capacity for its data centers in the U.S. And they've also doing the same thing in their it's funny because they're moving some of their leases in Europe to the U.S., and then they're lowering those and canceling those. And basically what they're saying is that they're growing more cautious about the outlook for demand, the AI phenomenon, and which means a Microsoft oversupply there, whether it be for the chips and everything else. That's the one thing that everybody's been, we've been talking about this before. Mm-hmm. Are we going to see the broadening out of the AI thing? There's no question that Taiwan Semiconductor, NVIDIA, and these companies made huge money because they did sell those chips. It wasn't like that was people were hoping they'd sell those chips. They did sell them. But what they were also hoping for was that this would broaden out to the end users, and the end users would make all sorts of money. Well, that's not happened. That hasn't happened. Okay, and people have been waiting for it for 2 years now. Then we got Satya Nadella last week saying in an interview that he's worried that this AI thing could turn into something similar to the dot-com bubble. Mm-hmm. This is what he said in public. I don't. The dot-com bubble was a much bigger bubble and was a much more extended one. In other words, the market was much more overbought. So it's not like he was calling for a redo of 2000 to 2003. But these are the things he's talking about. Now suddenly we have a firm coming out and saying that this AI spending is going to be. The concern, and it started in the DeepSeek. We worried about that. Is the AI market going to be as profitable as we thought? And it's becoming more and more evident that it's not. That wouldn't be the end of that doesn't mean it's not going to change the world. It doesn't mean it's not going to be profitable. But the stock market has been at 22 times earnings. Was pricing in that it's going to be a lot more profitable, and we're now starting to see that it's not going to be. That's, I think, why this market's suddenly getting hit so hard. That the realization of this issue of Microsoft and what's going on there. Remember, as everybody was saying, I'm sorry, you can see I'm getting all worked up about this, but
it's good. It's important.
We made some nice money, and we made over about almost 500%. On our SQQQ calls on Friday. We're going to make more money on some more calls that we bought as well in the chat room. But the point is that I don't want to this won't happen in a straight line. The market's getting hit pretty good. Now it's down about 1%, at least on the NASDAQ. This is an issue. And just remember, I just want to go back to what happened in we've talked about this before. When the NASDAQ got crushed, fell 80% in 2000 to 2003. And at the same time, the S&P dropped 50%. That was the bursting of that bubble. It was a much bigger bubble. Mm-hmm. But we only got a mild recession, okay? So when people say, don't worry, the economy's solid, that's fine, okay? But the point is we don't have to have a recession, and we don't have to have a bad recession to cause the stock market to correct quite a bit. The market had a bear market in 2023. We didn't have a recession. So we have to look about the mispricing in the marketplace closer than we need to be looking at the economy. And even that, we're seeing issues with the consumer and the housing area that's starting to weaken. So a lot of things are coming together now to come forth the things we've been talking about a correction or even a deep one, before the year's over.